All right. I want to talk to you a little bit about why interest rates matter when you're selling your home. Interest rates are generally set by the market, but Uncle Sam does have quite a bit of influence on what's happening. We do know that President-elect Trump will be sworn into office tomorrow on January 20th. At the same time, we have seen some things that have happened in the last week or 2 weeks, with FHA potentially having a reduction in their upfront mortgage insurance of 25 basis points on a $300,000 house. That could save $750 in closing cost. Also, there's a potential for a few dollar savings in the monthly mortgage insurance payment, but we're hearing that that's going to be immediately stopped. It has not gone into effect yet. It's supposed to be towards the end of the month, but again, we're being told that it was announced and it's going to be immediately stopped after he becomes president. So we never know what's going to happen with the legislative risk with the new administration in the office. So interest rates, market risk, political risk, all the different influences that we have to take into consideration. So let's talk a little bit about how that affects what people can afford to pay for your house. The history of interest rates, you can see back in the 80s, they went almost to 20%, and they've steadily gone down since 2010. They've been below 5%, so a lot of people say it's the greatest time to buy, and I'll agree that money's cheap and that buying a house is a good use of a person's money, but some people agree that right now is a great time to rent. Different types of loan. FHA does require a 3.5% down payment. That was raised a few years ago from 3 to 3.5% down. We do have several no money down options. THDA, USDA, and VA all require no money down. Still have to come up with your closing cost. Conventional loans, typically it's a 20% down. A few years ago they put in place that it could be as little as 5% down. Current rates as of last October, November, they were below, for 30-year rates, they were below 3.5%. Remember, November was the election, and you can see that they have gone up from the 3.5 above 4 and approached that 4.5% number. So that's the part that I want you to look at with me here. So we're going to flip over and look at the St. Louis Federal Reserve Bank, and that's where all of these graphs have come from, and you can feel free to go and look at those numbers. We're going to look at Zillow, and the only thing I like about Zillow is looking at factual data, and we're going to look at the mortgage rates that are available today on a 30-year fixed product. And you can see that a conventional is 4.55 today. A 30-year fixed on FHA is 3.987, so right at 4%, and most of them are hanging around that 4% mark today. So I like Bankrate.com as well. Again, you can see that we're at 4% up to 4.25 as well, and we're going to use those numbers. I like their calculator, and if you go under Bankrate.com under mortgages and you go mortgage calculator, and then if you will scroll, and let's use the number 275,000 just for a good round number, and I'm going to say we're not going to use any down payment. Let's use 30 years as the mortgage term, and I want to use 3.25% because that's the number I was seeing before, and I'm going to change this and so that it shows the amortization schedules, because that's going to be important to us as well. So we're still at $275,000, no down payment, 30 years, and 3.25%. So we're going to calculate that, and it shows the payment, principal and interest only, at $1,196.82. So let's just call that $1,200. So if we're to raise that to 4%, which we just saw that that's the number that's currently being used, that jumps to $1,312. So in the last 2.5–3 months, it's gone up 75 basis points, or 3/4 of a point. So if we go back to the 3.25, and let's hope that it does go back down, what I want to see is if we were to raise the price of the home to be sold from $275,000 to $280,000, how many dollars can we go up in the sales price to make that first number? Remember that $1,196, or we called it $1,200. How many dollars can we go up to make that same difference in the monthly payment? So at 3.25, 280,000 is $1,218, and remember, we're trying to get that to $1,312. So let's go 290. 290 at 3.25% is $1,262. Wow. 300,000 at 3.25 is $1,305. So let's go 303. 303,000. I think we're almost there. It's going to be $301,000, isn't it? All right, so it's going to be $301,500. It's going to be right close. So let's look at this and show you one more time. So if we take and look at $301,500 at 3.25%, that comes up to $1,312.15. Let's compare that, and we're going to go to Bankrate, and we're going to go to the mortgage calculator. We're going to do the same thing. We're going to go $275,000. We're going to go 0 down payment, 30 years, 4% interest, and we're going to calculate that. And it shows $1,312. So $26,500 difference in purchasing power based on 3/4 of a point interest. So we don't know what is going to happen with President-elect Trump going to office. We've seen that interest rates go up on the 30-year fixed mortgage, and we've seen them start to decline a little bit in January. But after tomorrow's inauguration, it's anybody's guess what will happen. We've seen some large companies say they're going to keep manufacturing jobs in the States, and we've seen a lot of big talk. But we know that there's going to be a lot of potential changes, and with that change comes some turmoil, and we don't know what's going to happen with the financial economy of the states. So I want you to think about how that 3/4 of a point has changed since the 1st of November, and how it's going to impact what's happening with your home sale. If you've got any questions, let me know. I'll be waiting for your call.